the exchange rate moving away from fixed regime to a more managed, flexible exchange rate. I think in terms of regime, it's a good movement. But in terms of level, it's not easy to manage it. So I think this is a new process for Chinese authority. They are learning in the process is also very important. And also, the most important things in this process, and gradually RMB is pegging to the basket, not to the dollar now, which is called the second difficulty as well. So we will see with those two things, the process will be a bumping process. And with Chinese growth to slow down and dollar getting appreciated on the upside and RMB have pressure on downside, also add them together, it is not an easy process. But Chinese authorities are committed to stay with this manager's floating exchange rate regime. I think this is a very important commitment. And also I think it's important for Chinese authorities to provide more communications, clarities on the policies and all those issues. And the world should understand more Chinese exchange rate regimes don't overreact as well. So bring those two things together, I think will reduce its volatility as well.
Now I'll shift the topic to the world economy. With China's weaker growth and lower oil price, there are much uncertainty in the global economy. How do you think the world economy will perform this year?
Well, this year we forecast 3.4% global GDP growth rates. It's not as strong as we thought. We all hope we'll have a much stronger growth rate, but it's still 3.4%. I think we should not be too pessimistic on those numbers. The key issue is advanced economic growth is still not very strong as we thought. USF 2.5, 2.6 is still not strong enough. And Europe getting back, but still 1.5, 1.6 is still not very strong. And the emerging markets still relatively weak because they're on the cyclical adjustments processes on downsides. If you look at Brazil, last year it's negative 3.8%. It's a recession. This year it's continuing negative 3.5%. Russia last year negative 3.7%. This year continue negative 1%. So emerging markets still on the weaker position. I think that's the way to bring the global growth to slow down. And the growth will continue on that way because we forecast in the next 5 years, the potential growth will relatively lower. I think that's very important. Meanwhile, on the financial market, because we're facing a diverging of the monetary policy, Fed raise interest rates, ECB and the BOJ continue to ease monetary policy. So we'll see it could have a capital flow volatilities and also it's possible to have a more market volatility as well because when interest rates change but the growth did not pick up, market valuation have to readjust. I think that this happened in the past 2 weeks, probably will continue to happen in the next 12 months. So market could be very volatile. And we are concerned the structure, liquidity issue in the market. So I think that's the key issues the authorities and the companies need to pay attention as well for this year, 2016.
Now I have to ask about Korea. With the world economy not picking up, Korean economy doesn't seem to have a driver for growth. What do you think Korea faces the challenges right now?
Korea obviously last year had the challenges because the external environment is weakening, growth is still slowing down, export didn't do very well, right? And also internally you have a mess and epidemic. So that's reduce your tourist industries, people's consumption, all those things, which reduce your GDP growth is slowing down. But we expect to see the growth pick up this year. I think it's not because the trade in the global level will improve. I think growth in trade is still relatively weak. We forecast roughly 3.5% trade growth, which is in line with GDP, which is weak. But the government's policy to promote more trade and continue on the fiscal policy and the monetary policy to support and aggregate demand, I think those things probably will bring the growth getting back stronger this year than last year. So I think the whole economy this year in Korea will run better.